Mr. Investor Lot, today we're going to be talking about Workhorse stock, baby. And why is Workhorse down in pre-market? Could it be because Ark Invest has sold 460,000 shares totaling over $10 million in a single day? Yes, we're going to be talking about Ark Invest and the USPS contract. We're going to be talking about this competitor that has entered the market and their system, so how this could pose a threat to Ark Invest and why investors are currently scurrying around and some are actually panic selling. We will also talk about this that popped up into the news. So this was very interesting. It's an Israeli firm that released an EV battery that can charge in as little as 5 minutes. But before we get into that, my name is Miguel. I look for the juiciest growth stocks. I'm a retail investor here in London. And if you'd like to support my channel, you can click the join button just above my head. It's only 99 cents and you can become one of my true supporters. If you're unable to join as a member, just you clicking like on this video and clicking subscribe is enough for me. I appreciate you guys and I love you guys. Thank you for watching. So first things first, let's talk about Ark Invest. They have sold off over $10 million worth of shares of Workhorse, which is quite unusual in a single day. Me being a massive Workhorse bull, for me this is quite alarming, and I just wanted to figure out the reasons, and I think I found a few, and I'm just speculating what these could potentially be. Always remember that these videos for entertainment purposes only. I'm not a financial advisor. Okay, if we want to see Ark Invest behavior, let's look at their current daily purchases. So as we can see here, throughout January, they were purchasing, enjoying the stock. They were even buying at prices which were $25 and above. And all of a sudden, at $23.33, they have sold a whole bunch of Workhorse. This is $10.7 million worth. This is extremely unusual because Workhorse is not number one and it hasn't gone over 10% in their portfolio. So as you guys may remember here, in both Ark KK and Ark Q, in these portfolios here, when Tesla goes over 10%, they usually sell off a bit of Tesla to, make sure they risk manage, because as an ETF, they want to make sure that if it's over 10% in a single stock, this is worrying for investors because people invest in ETFs for safety and stability as well as growing their money, right? As we can see here, they now have under 2 million shares of Workhorse valued at $45 million. And this is 1.72% of their portfolio. So why have they sold off such a big amount? So here are a few reasons I think they've been selling off. The first one is to reduce exposure and risk to a stock. So competitors are coming. This is news that is currently out. And I think risk management is the most important part to shareholders in an ETF. So as we can see, it's caused the pre-market value of Workhorse and probably a lot of other speculative investors, retail investors, to panic and actually start to put in their sell orders before the market has even opened. So when people buy into an ETF, they want to invest across, a range of different stocks within particular fields. For example, this is space exploration here. So the one we were looking at with Workhorse in is the Ark Autonomous. So I think when investors invest into an ETF, they're looking for growth, but they're looking for growth at less risk. Otherwise, investors would just stock pick and they'd put 100%, just put all in on Tesla. So the news is GM has got this Brightdrop system, and what they want to do is actually build delivery EVs now, and they've got 500 FedEx trucks that have been ordered. So some of the breaking news that has probably caused Ark Invest to take a look at the whole scenario is GM's entry into the last mile delivery world. So GM has now entered and they've come into last mile delivery and they want to be a big player. So let's watch a quick 1-minute video on Brightdrop so you can see what it's about, and then we're going to take a look at the specifications of these vehicles and why they may be a competitor to Workhorse.
This is no ordinary delivery system, and this is no ordinary shipping pallet. It's the Brightdrop EP1 e-pallet, and it's part of an electrified and connected delivery ecosystem. Brightdrop is designed to help reduce touches, errors, labor costs, and physical strain on your workforce, which allows you to transport goods from the warehouse shelf to the retail shelf and right to your front door with precision management tools you need. All Brightdrop products are monitored by fleet and mobile asset management platforms. From concepts that move goods over medium distances to rapid loading vans, powered by the Ultium battery platform. Brightdrop has been designed to help reduce total cost of ownership, maximize productivity, improve safety, and lower your carbon footprint by enabling efficient deliveries. Backed by robust support services, Brightdrop is an integrated ecosystem that can help transform how you deliver goods and services.
Okay, so General Motors has introduced Brightdrop And the EP1 is the first vehicle they've test piloted with FedEx, and this is going to be available in early 2021. So as we saw in the video, I don't think this vehicle was the selling point right here, but I think the efficiency of the operations is the selling point. So when we take a quick scroll down the article, you'll be able to see here, this was very interesting, the innovation with FedEx Express. So when they done this successful test pilot with FedEx, they found that FedEx Express carriers were able to effectively and safely boost their operations. So this meant handling 25% more packages per day. If this is true, oh baby, this is insane. That's a lot more productivity by using that kind of operating system. So FedEx found that the EP1s were easier to maneuver and reduce physical strain. So now what's happened is they've went away and they've said, you know what, your new vehicle, the EV600s, I want to buy that. So they're due to be the first customer of the EV600, and they'll be receiving their vehicles later on this year. And these are the specs that may be making people sweat right here. On a full charge, it's got 250 miles of range. Also, it's got faster charging. So you see here 170 miles charge per hour. So you can probably get a full charge in about an hour and a half, something like that. It's got over 600 cubic feet of cargo area. It's got loads of different safety features, which is important because when you're driving around delivering and you're getting close to the curb, a rear pedestrian alert system, it has blind spot steering assist. And whilst they were stating, you know, that there's a lot of interest surrounding their newest vehicle, they have said that the first vehicles are going to be delivered by the end of this year, but they expect to be able to make more EV600s to more customers starting early 2022. These vehicles will also have all of these kind of telematics here. So they've got integrated, you know, cloud-based software platforms. They've got built-in connectivity so you can handle your data and your insights to help improve your operations. And customers of the EP1 will be able to manage this via mobile and see real-time features, including the locations of the vehicles, battery status. So now when we see here, it says future concepts. These are ones of the things that I took a look at and I was like, okay, they continue to grow its product offerings over time to include a portfolio of integrated zero emission products. So does that mean that this product is not zero emissions? The next thing, they said they've had a really successful test pilot with FedEx. Why have they only ordered 500 vehicles? With Workhorse, as you guys all know, I'm a massive Workhorse bull, and with Workhorse we just got an order for 6,300 plus vehicles, right, from Pride. So this is one of the biggest like Canadian logistics companies, I think it was, and rental and leasing companies that helps with transportation, logistics for long haul and last mile delivery, and they've put in a 6,300 vehicle order, whereas FedEx here only put in an order of 500. So if it was that efficient, wouldn't they want to load the boat on it? The next thing I want to look at is how big the last mile delivery sector is going to be by 2025. It's going to be huge, and I think there's room for a lot of us. So as we see here, GM is taking its chances in this last mile delivery sector, and that's because the total addressable market worldwide is going to be worth more than $850 billion by 2025. Even if Workhorse was to get 2% of the market, we're going to be caking. So I don't think we need to worry. I think what we need to fundamentally look at is numbers. Numbers don't lie. So when we think about the last mile delivery sector, we need to think about all the different competitors. We've got Ford here with, you know, their e-transit. We've got Rivian here with Amazon. And now we have GM here with their Brightdrop. So should we be concerned? I don't think we should be concerned. I think we need to see numbers. Numbers are the most important thing, because can they do it cheaper than Workhorse? That is the question. Fundamentally, as a customer, you need to know your fleets are going to be making you money, baby. They still need to prove that they can do it cheaper than us. Our last mile delivery with the drone can be as cheap as 3 cents per mile. So with a total addressable market of $850 billion, and we've already closed an order of 6,300 delivery vehicles for Pride Group, all I can say is show me the numbers, baby. The numbers that they're cheaper, then that's the cause for concern. But for now, I think we're one of the best ones in the last mile delivery sector. So GM, get your numbers out there, prove that you're cheaper and more efficient, and then we'll sweat. But until then, Workhorse for life, baby. Let's talk about institutions. Okay, so these are some old figures because it hasn't updated for some reason. So it's just showing, you know, BlackRock, Vanguard Group, all of these people who have invested. And it's showing that the majority of institutional owners are increasing their positions. So although we've got 58 that have decreased their positions, 15 have held it, there's 150 that have actually increased their positions. And overall, we've got 223. That was in September, actually. And we probably have more right now. So the institutional ownership in September was 33%. So if we take a look at the short interest, we can see that a lot of people were trying to short up the stock from the 12th all the way to the 19th, and it's now dropped into 17. So we're not sure what it will be today. It looks like the stop's still dropping, so do these people know something we don't? We can also see here that some institutional owners have exited their position entirely with minus 100%, as you can see here, share change. But there's also a lot of people who are holding and still purchasing throughout January. We actually have 352 institutional owners, and here it states that the institutional ownership can be as high as 45.2% of shares. So guys, let me know your thoughts. What are you going to be doing in this pre-market zone? Are you going to be averaging down? Will you take this opportunity to buy more? Are you going to sit down on your hands and just wait, stay cash heavy, and just see if we can get it at a cheaper price? What are your thoughts? Are you nervous as an investor? Let me know all your thoughts and feelings in the comments below. As always, remember that this is for entertainment only. If you'd like to support my channel, it's 99 cents. You can click join. If you're unable to join, just hit me up with a like and subscribe. And until next time, my good friends, I will see you later. Mr. Investor Lot, over and out, baby.